There is a reasonably good correlation between the annual price change of the FedEx stock price and US GDP. That's something we've been observing here at ATFX since many years. In 2017, for example, the share price dropped by about 66% from its high, and a couple of years later, US GDP lost about 9%. Of course, we know that this huge drop was linked to COVID. But in 2006, the FedEx share price also dropped. It dropped by 73% from its high, and just 2 years later, the US entered into recession. Today, from its 2021 high, FedEx share price is down by almost 51%. So the share price is hinting of a sharp decline in the US economy. This is also something that should not come as a surprise because inflation remains strong and the central banks are doing their best to try to reduce inflation. Usually the Federal Reserve would increase interest rates just a few times, and this would be enough for commodities to trade lower and stop inflation worldwide. But as we have seen recently, it's not working because of the energy crisis on the heels of the Russian attack on Ukraine. So instead, all central banks around the world are now increasing interest rates, with the exception of the Chinese and Turkish central banks. So what central banks worldwide are doing today is that they want to increase interest rates to cause the employment rate to go up a bit, and for that to reduce inflation. But unfortunately, I think it's just a temporary solution until we fix the energy crisis. So with that in mind, I remain bullish on the US dollar and bearish on US stock markets and gold prices, as we have been here at ATFX for some time.